All right, welcome everyone. It's nice to see some faces for a change, and not just a screen. It's been a couple of years now since we got to sit in this room and have some chats about real estate and get some input and some feedback and questions. So we're pretty excited to all get back here. We figured this time we'd do it a little bit different, as opposed to just having one guest and flow through. We're going to have a little bit of an open panel. So if you guys have any questions during the when we're chatting or giving some updates, just feel free to put your hand up or throw something at us, and we'll try and respond. So on the panel tonight, we've got Armour with Refined Real Estate. He's going to chat a little bit about some of his projects and how he's dealing with our current market, because it's a big, it's the talk of the town right now. Is how do you navigate your investment journey in this type of market? And he's got some success stories to share and some ideas, so we're excited to have him here to join us. We also have Amanda, who is my business partner in LePage and the expert realtor on the panel. And she'll give us a little market update, and if you have any questions about that on the sale or purchasing side, then we'll be happy to channel those. And my lovely wife Jenna from Happy Place Property Management, and she'll be giving a little bit of an update on the state of renting and rental rates, and because all of that has changed so much since we last met. We talk a lot about how the prices are going up in real estate, and it's harder to find cash flowing properties, but we got to think on the flip side that rental rates are also going up as the prices go up. So there's still ways to do it, and she's got some exciting stories I'm sure she's going to share on all of that. So without further ado, we do have some cookies and coffee back there. If anybody wants a drink, we've got some bubbly things. Yeah.
Costco's out of water. So.
We have no water. We've got the sink back there. So maybe I'll hand it over to Amanda now, and she can give us a little bit of a market update.
Yes, thanks again everyone for joining us. So I'm kind of in front of the screen here.
Stand up if you want.
Yeah, I might just move over. That way I can see it too. So these numbers are, it's always, I was just going to come here and talk about it, but actually seeing it is huge. And putting comparisons on previous years. So this is a snapshot in time. This was April 26th, so this is on the day April 26th numbers from this year, 2021, 2019. So we're looking at overall listings in HRM right now. There's 355 active listings compared to 843 in 2021, and then all the way back to 2,891 in 2019. So that really gives you an idea of how much inventory has changed, and I guess really all comes down to how long properties are staying on the market for. Average days on market, 16 days it's taking on average to sell a home in HRM versus 2019, 67. List to sale ratios, homes are selling an average of 111% of the asking price. So last year was about 103%, and then of course it goes down from there. So sales this month, we're at 452 sales, which is down from 698 last year, and again that really comes down to lack of inventory. There would be more homes that would have sold this month if there was more homes on the market. We're seeing a lot of interested buyers, and we're listing homes. We're getting lots of people come through the doors, lots of people write offers, so there's no shortage of buyers out there. There's just a lack of inventory. And year-to-date sales, so we're at 1,520 versus 2,300 this time last year. Last year was a really impressive years for numbers, and then it's pretty comparable to 2020 and 2019. Months of inventory. So if we were to stop listing homes today, everyone just stopped listing homes, and we only sold off what was left on the market, it would take 0.68 months to sell off what's left. So less than 30 days to sell every single home left on the market. So this comparison to 2019 is 6 months of inventory. So 6 months is a balanced market. So we're definitely in a seller's market. Average sale price in HRM, we are so close to that 500,000 mark. It's crazy. 499,564 versus 2020 and 19. In 2019 we had just hit In appreciation from last year, 18.6%. Last year was 19%, and then 2019, 1.3%. So you can see the shift we've had in just a few years here in the Halifax real estate market. So
It's crazy. We had Amanda and I had lunch with the former president of NSAR today, and he was talking a little bit about statistics. And I was saying to Ian today, like we eat and breathe these all the time, but it's actually really interesting to us now as well to watch it and trying to learn from these numbers. The average home is getting like $117,000 over asking price, which, you know, if you would have said that to me when we were sitting here a couple of years ago, I would have said you're crazy and that'll never happen here. But you know, it's here now, and it's a new reality, and it's not showing any signs of slowing down. We're seeing maybe a few less offers that are coming to the table for certain properties. I wrote one or a couple over the last few days. We won one and lost one. We were one of only 3 offers in this situation, and we're used to hearing, you know, there's 15 or 20 offers. So we were one of 3 or 4, and we had bid, I think, 100 over asking, and we didn't get it. So even though the numbers may be shrinking on the amount of offers that are coming in, we're still seeing large activity and people coming out and trumping them.
and it's
Can I ask a question?
Absolutely.
It's literally just a question. On 2019, we have 2,800 homes, 2,800 listings, correct? And then our average price, it's 300,000. But that's an average on the 2,800, correct?
That's the average sale price.
of homes that have sold. So that was active listings at that date.
Yeah. So this
Okay.
is what the houses that did sell sold for. That's how many listings we had
Okay.
So
at that same snapshot time.
Because if we do have less inventory, which is a fact, correct? Then probably our average sale price is even higher because we have less offer and higher demand.
It's true. Our number of sales, see what's happening is the houses are still selling as soon as they hit the market. So it's not as much of we're not selling as many homes, we have less homes staying on the market. So we still have quite a few sales to represent. If you look at 452 compared to 700, yes, there's a little bit of a gap there, but it's not a crazy number. It's not that much of a delta between the two numbers.
yeah, we're pretty comparable to 2020 on year-to-date sales.
Yeah.
But yeah.
But yeah, you're right. There could be some disparity, and that price could be actually higher.
Yeah, which I'm just feeding onto what you're saying and
Yeah.
the way the market.
It is.
Yeah, it just continues to increase. I feel like we're watching that number, and you know, next week when these stats go out, it'll probably be pretty close to that.
Yeah.
That 500,000 mark. But it really has shifted the way that buyers are entering the market. When we're looking at an average sale, homes going on average $117,000 over asking price. Like you can't go into the market with a $400,000 budget looking at homes listed for $375,000. It's unrealistic in this market. So we've been able to be very successful in helping buyers buy homes and investors find homes, but we've really had to shift the way we're looking at you know, what homes we're looking at and what budget and what range. So it's just shifted the way we've done business compared to just a few years ago. It's just been such a, you know, that we're adjusting and the public's adjusting and but overall it's been a bit of a roller coaster.
Absolutely. Just like investing, when you're investing, you have to change your strategy based on the market that you're given. You know, it's the same thing in the residential side. You got to set your expectations when you're buying realistically, or you're going to be disappointed and you're going to chase around opportunities that are never going to come to fruition. So adjusting your, you know, pivoting is a big word over the last couple of years.
Yeah.
You know.
Yeah.
Any reason why there's less house on the market?
Well, I mean, there's a combination of reasons, really. One is anybody local thinking of selling is scared. Where are they going to move to? What are they going to buy? Are they going to be able to move up market, or are they going to actually have to go down market? So that's a big reason. Any other reasons you might identify?
I think that's one of them for sure. We have so many people saying to us, I love, the numbers in this market just make me want to sell, but I'm feeling it on the purchasing side. So it's tough. And you have to wrap your head around selling your home or buying a home without having your home sold, because we can't do it in the opposite way. We can't sell your home and then try to find you a place, because it could take a while to find the right home. So it's a bit nerve-wracking, and just trusting that the market will sell your home quickly so that you can successfully move into your new home. But again, it's a complete shift on how we think about real estate. And so that's made a few people, I think, a bit hesitant to list, even though they see the benefits of you know, offloading in this market. Yeah. Any other questions about the interesting statistics? Do we need some chairs, or
We have a chair.
we can?
There's a couple stragglers there. We can
I
probably.
mean, you don't have to sit up front, but if you want. You're
Come
always,
right up front. We'll talk.
you're always the last ones to go.
Not at all. Don't worry about it.
I'll try this one here.
Thanks, Amanda.
Yeah.
It's always interesting. I love hearing about the market updates and seeing it. We live it every day, but you know, seeing the numbers up on the screen really brings it to life.
In comparison to previous years is where you really see it.
Yeah, absolutely. Next, we have Jenna Ross. Talk a little bit about property management and the state of the rental market, and yeah.
Yeah, so welcome everyone. So nice to see everybody in person, and there's a lot of new people that joined our group that are here today, so thanks for coming out. And you saw some of the trends and things that I sent out in the newsletter, but just quickly I will say that market rents are going up by quite a bit, and some people may or may not have seen, I had a Facebook post go viral, a little viral in a bad way, because people were like, everybody was jumping on, like it said it was wheelchair accessible, and they were questioning that and sharing, and then people were like, you know, angry and laughing, and but it's because a lot of tenants can't keep up with the prices. They can't afford, and they're upset about that, and they're vocalizing that, and they're vocalizing it all over the place. If you post something on Facebook Marketplace, some people may see that. Basically anything that you post over $2,000 a month, you're gonna get that. So that's something to be aware of, and I always encourage my clients to go with market rent and cover your expenses, have a little bit of cash flow per property, and there's sort of a sweet spot. Like for the place that I listed, I recommended $19.50, and they came back with a laundry list of reasons why they felt like it should be at this price. We put it out there, and then I sent the post back to say, well, people aren't really feeling this listing at that price, and I can't really deal with this because I'm busy and I don't really like how this is going. So so that's something to keep in mind. But there is that sweet spot where if you have a property and you add up your mortgage, your insurance, your property tax, property management, if you choose to go that route, and then you add some cash flow, that's where a good market rent, and that's where it's good value. So even if you're purchasing something in this market at the prices, today's prices for real estate, that's a good benchmark of how to set your rent. And then if people have an issue, well, go buy a home. You know, you'll have less challenges that way. Do you have a question?
I did. I was just
Yeah.
curious. What's realistic cash flow percentages right now?
You know, it really depends on what you're buying, but in this market, it depends, like if it's a single family home, which I tend to deal more with, or an executive rental, if you're getting $200 to $300 a month, I would say that's doing pretty good, because you're gonna appreciate and you're gonna have mortgage pay down and all the other benefits. You don't wanna be looking to purchase something where the numbers don't work and you're losing money every month. I wouldn't get into that situation because we don't know how things are gonna go, but I think that's a good benchmark. Yeah.
Thank you.
How much is the increasing interest rate affecting cash flow? What are the number you're seeing?
It wouldn't be instant, because a lot of people are.
Yeah,
locked
but
into
if you have the opportunity to purchase a property and set your rents, then I would just adjust for that.
Yeah, I'm
that
just
make sense?
curious, cause I'm in a locked rates right now, but just curious if folks are in variable rates, how is that gonna affect their cash flow situation?
Yeah, I mean, you have to analyze your deal, and like when I'm working with investors now who are buying, they just crunch their numbers differently. They have to put in that variable amount that, you know, do we know what the interest rate's gonna be at the end of the year? No. We have to expect as responsible investors that it's gonna go up. You know, we've had it really good for a really long time, and we have a lot of inflation happening right now. So put it in your numbers, and put a bigger number than what you think it's gonna be, and make sure that you can still, you know, stay afloat. So the offers I've written this week with investors, you know, that's what they're doing. They're actually putting some higher numbers in for interest rates for the variable, and if they can't at least get a little bit of cash flow on the deal, then they're walking to the next deal. Yeah. Arnie?
In most of your variable rate mortgages, you're not gonna see a change in your payment until the end of the term. There are a few out there that might change annually, but most of them are till the end of the term, so you're not gonna feel that hit until 4 years from now or 3 years, whenever your next renewal is. So a lot of people may not be adjusting in that time period. Wouldn't be too stupid to maybe increase it a little bit as you go along, so you don't have to all of a sudden have a big lump sum, which we know there's a rental cap increase, so that's not gonna be possible in 5 years. So being smart for the next 4 years is probably a really good idea when that rental increase hits you, when that interest rate increase hits you.
That's a great point, Marty, absolutely. Yeah, plan for the worst and hope for the best, and if you make those small increases over time, you know, some people, myself included, you get comfortable with the rents that you have, and we get put in a situation where we are now with a rent cap, and we're kind of pigeonholed of what we can do, so we can't make those changes in order. So, you know, it teaches us all a lesson that prepare for the future. Plan, because things change.
Do you have like an average price per bedroom that you're charging for your rental units?
No. The way that I come up with the rents is really just working with the investors, and like I said, kind of going through their expenses and adding those up. That's kind of how I do it, because I feel like that's how we set it. So I couldn't say a price per bedroom because it depends on the area and everything like that. But I feel like in this market, putting that out as a rental price, people are happy to pay it because that's just the way. Like I have tenants who paid $1,700 for a single family home 3 years ago, and now because the house is for sale, they're looking at $2,500 a month, and it's sad. It's awful, but that's the reality that we're dealing with right now to get a comparable house because prices for real estate have gone up so much. Yeah. Andrew had a question back there.
No, I just had a comment from personal experience with the variable rates, especially 2018, when we started hiking them. It really depended on who the lender was. So I had at the time 2 mortgages, one with TD and one with Scotia. The Scotia one updated the next month. So as soon as the interest rate went up, the next payment was a little bit bigger. TD adjusted the amortization, so I ended up having like a 32-year amortization or something to that extent. So the payments stayed the same, but I modified the amortization.
Yeah.
I did hear that at a certain point, they will reset it if it goes too far away from the original rates.
Yeah.
But from my experience, actually, it depends on the lender, and with variable rates, it can.
That's nice that TD has that option too, because you know you're protecting your cash flow at that point.
Exactly. So in that case, it won't affect your cash flow. It will affect just the amortization.
Absolutely, good to know. Get on the phone with TD.
Question?
So you're saying with single families, are you finding it's mainly families that are renting, or are you having trouble getting families in, or is it more like different groups of people are coming in to move into that house?
So our preferred tenant for our company would be people relocating from other provinces who maybe have had a house that they sold and they're moving here, relocating. That's kind of our preferred tenant profile.
So short-term rentals?
Long-term, like we do mainly long-term rentals.
Okay.
Yeah, but we like families. people with jobs. A lot of our places are, people with cash. Some kind of income. That was funny. And then a lot of our places are pet friendly because we worry about screening them very carefully, and if they have a pet and they present well and they take care of themselves, they're gonna take care of their pets too. So that's kind of how we look at it.
So I guess, sorry, just, so I guess there's not an issue with renting single family homes
Oh
for
my
the most
gosh,
part?
no, people really like them.
Yeah,
Yeah.
Lined up. Oh yeah,
Um,
absolutely.
really, okay.
Because I was hearing on News 957, they were talking in Nova Scotia that we have a lot of homes, like, and that's what people are used to, and that's what they really want. And we, like apartment buildings too, yes, in Halifax and things like that, and people they want a single family home, but they may have to look at other options because of the rental prices, so. Yeah.
Also, overall vacancy is 1%, so there's a lot of people out there that need a place to live.
Yeah,
And I
absolutely.
would argue in the single family homes, it would be less than that, like for something that's affordable, like now would be anything under $2,000 a month. There's a huge demand for that, yeah.
Jenna can speak to it, and we can speak to it on the real estate side, that a lot of people who own single family homes as investments that didn't get into it, which she calls accidental landlords or landlords by non-design. Those people see the market being super hot, they're selling, they're getting out of the market, which is creating a lot more, a lack of inventory for people wanting to rent single family homes. So I don't know, what's faster to you, a single family home that rents out or an apartment? You know, or a condo or something? Would you say that you have more people on the wait list for?
A single family home, and because of the shortage with them, like I have tenants whose homes are being listed, so basically all of my accidental landlords have, like any ones that I have left are selling before summer kind of thing. They're just, and doing that, but the other challenge is that it's basically every community in Halifax, there's a demand, and families are being faced with the fact that they are going to have to be open. Not only are they paying $800 more for the same property, but they have to really widen the circle of the communities that they're going to. So somebody in Lance, people, for example, I have somebody in Lance and they're looking in Lower Sackville and Dartmouth, and like so that's kind of the situation too. They can't be choosy about what areas, which is tough for people with kids in schools. So.
We're seeing that in real estate, same thing.
Mm-hmm.
You have a preferred area and then eventually realize that you have to expand that preferred area.
An interesting statistic I read in the IPOANS is there's approximately 4,000 landlords in Nova Scotia. So if you think about that for a minute, you know how many people we have renting, and we have some landlords that own big multi-units, but we have a lot that own single family homes. So when they're exiting the market, it's creating, so you got that happening, then you have longer term single family home rentals competing with Airbnb, which is a really hot market right now, and it's getting hotter for locals, and I think Ian might be able to chat about that a little bit. Yeah, so the long answer to the short question is definitely single family homes are highly rentable and in high demand, and people will pay a premium for them.
Okay, thank you.
Absolutely. Do we have any other questions about the rental market or rents, setting rents, or anything like that?
Let's assume, for example, something below $1,500 or $1,200, single family home. How wide would you have to go on your area range to find something like that? On your opinion?
How far do you have to go find that property?
Find it for rent.
You have to start at the airport.
You're not coming in.
Yeah, like go the other direction.
Yeah, get on a plane. No, even the rural markets right now are seeing an influx of people renting. And the big reason for that too, and the people paying higher rents, are people are relocating here before they own a place. That's happening a lot. People think, I'm gonna sell my home in Ontario or wherever else, make a lot of money, come here and buy a house. They're figuring when they get here, it's not that easy. There's not a lot of products, and this is why we're having so much competition. So those people are renting homes, and a lot of them are just gonna stay in those homes until until the market's gonna correct itself, which may or may not happen for a significant amount of time. It'll take almost 2 years to get our inventory back to normal levels of a balanced market. This is what we're hearing.
So your question is interesting, because Craig and I, we own some single family homes in the Eastern Shore. That's how we started, and he's kind of smiling to himself because his property manager and his wife has set it, like we've set the rents at market rent a few years ago, and we're in a situation where we know the families, they're part of the community, they're part of the school system that our kids go to, and so we've been really good to them, and we haven't raised the rents. But if we looked at what market rent would be, it would be a lot more than it's comical, but sort of.
It's funny.
It's funny.
You have to laugh so you don't
I
cry.
care about the tenants, so we're happy.
Yeah, I mean, we've owned the properties for a long time, and we've taken good care of the properties. They're doing well, so we don't really need to push the rents. And some of the people that rent from us are involved in our kids' schools, and bus driver from our schools. So it's like, we don't want those people pissed off at us, really. At least till they graduate.
Bus driver speeding past us.
Yeah, you're not getting on the bus today. My toilet's still broken.
Kids chasing the bus. We can't do that.
So that raises another question. On a situation like that, and I know that's a beautiful relationship more than just the tenant and a landlord. If that wouldn't be the case, but they're renting the houses for 7-8 years now, how would you proceed to bring the rents at the market value? And is that possible? With the same.
There's $1 million question right there.
So we're capped at 2%. That's the most we can do until the end of December 2023.
What after that?
So after that,
It's a balancing act, right? You want to maintain a level of integrity with your business, because your reputation in this industry, it travels very far, very fast. And social media that's what's going to happen. So you've seen it. I don't know. Once in a while, I'll fall into the trap of going to the tenant's Facebook page. I don't know if any of you have been to it, and the rants that happen there. Landlords are not looked upon very well in this market, and probably most markets. They think we're all greedy and rich, and we don't even need to charge rent in order to afford these. So I guess you got to do it. You got to plan it out, strategize it, do it, in increments, make it comfortable. Explain to them, have a good conversation with them. Look, my rate, we own these properties, our insurance has gone up, our materials, our repairs, everything has gone up for us, but we can't control our rent. If you have that conversation today with them and they understand, then, it might be easier to slowly increase your rent down the road. But it's not going to happen overnight. It can, but then again, you're risking your reputation, and then also, it's hard on the industry. It gives, the people who are doubling rent and things, that hits the media, and then that's why we have the 2% rent cap, because too many people take advantage of the situation.
And we have really great tenants, and pay early, and I don't want to push things out of affordability for them, because their salaries are not going to go up they're not going to go up at that rate. So
And I ask this on both ends because I'm on one of those situations.
Yeah.
My landlord, it's a great friend of mine from a long time ago, and I ran out the house that I live in, and I have a beautiful rent.
Yeah.
But I value his rents as well, and I lead some work on his rents and help him to raise some of his rents. And I told him, you should raise my rent this much.
Wow.
So
You can come rent from us anytime.
that's why I was curious. So like you said, it is $1 million question,
Yeah.
and nobody seems to, at this stage, have a solid base on it.
So the easiest time to set the rent is if you have a vacancy and you can put it at whatever you think is fair. Like you don't want to be too crazy, because it may not move. Like things over $2,000, $2,500 a month, depending on what it is, it's going to sit there because people that can afford it, who make 3 times that amount take home, they've got choices. They've got more choices. Like there's not like a housing crisis at that level in the executive housing. So yeah.
Since we're talking about single-family homes, HRM had a change on policy on the backyard suites and basement suite last year. Do you see a lot of single-family homeowners taking advantage of that recently, or not really?
I do see some who are planning backyard suites, which is pretty exciting, like in Halifax.
Yeah, what would be the usual kind of a turnaround time, or like do you have kind of an estimate? Like usually it takes about a year to get some available, or?
Do you mean to build it?
Yeah,
Like
to build
renovate?
it, yeah,
So I guess it
exactly.
depends on what you're doing. Like we had one of our last rentals we did on a single family home. We had a garden suite priced out, which is basically a garage that's insulated that has accommodations in it. And at the time, it was right around the time when material costs started skyrocketing. So we nixed the plan. But it was going to be about, I think, 5 months with that builder. They were already there renovating our full building. But downstairs, if you're going to put an in-law suite or something, I mean, it just depends on your contractor. And a guy like Ian will get it done in 2 weeks. I got his card right here. He's like welcoming.
Excuse me, I have a question. How people, renters cope with rent around 2,000? Do you feel that some payments is missing compared to previous years?
Well, yeah, not like, so we screen people, so like our benchmark is to say like that they would need to have 3 times the monthly rent that you're looking for in their take home, like to show that, so however it comes. So we don't really see that because of how we screen people. I'm sure there's some that have because of job losses and things through COVID. But I also caution people who are advertising for themselves out there because there's a lot of tenants who are very desperate. So they can prey on these ads and they don't care so much like about the price, because if they can make it for they could do their damage deposit in the first month's rent, but they might have 0 intentions of paying again. And then if you don't know what you're doing with a fixed term lease and you get stuck in a month-to-month lease, and that's going to be a tricky spot. So then I really caution people about that because they just need to come up with the damage deposit and the first month's rent, and they may not, if they're not screened properly, they may just decide to not pay and do all kinds of things with your property. So that's a risk.
Maybe people feeling forced to rent properties that they can't afford.
Yeah.
Yeah, so that would be, I'm assuming there would be a lot of
You have to be
it's a tricky situation right
extra
now.
careful, right?
Yeah.
So, holding on the backyard suite question, do you guys predict like a kind of a sunset on that opportunity with backyard suites, or do you think that's going to be a policy that will stick around?
I think until the housing crisis is under control, it's going to be an option. I think it's here to stay for the long term. And I think there's a huge opportunity because basically you're taking any R1 zone property and able to have a duplex, and it doesn't just have to be an in-law. You can actually rent it out.
Yeah, are you seeing? Oh, sorry.
Good.
In terms of, to build on that one, are you seeing any differences in the valuations between houses that have secondary suites, backyard suites, compared to duplexes?
Well, I just won an offer on one yesterday with a client, an investor. A single family home next door would have sold for 400 and this one sold for 550.
Sorry, in terms of comparing duplex sale prices to houses with a secondary suite, so they're kind of duplexes, but one's a secondary suite, one's a main unit. They're the same.
I would say the value is always going to be a little bit higher with the duplexes because they're by design. When you build a duplex, you build it by design to be a duplex. This is a retro. Would you agree?
I would 100% agree. Yeah.
Square footage too is limited on these the backyard suites, so you're probably gonna have more square footage in a typical duplex.
Yeah.
In the second unit.
You just recently did one, didn't you?
Yeah, not too recently ago, but yeah, I did one. Took just a regular house in the north end, half finished basement, but then completely gutted it and put in in-law suite down there. Refinanced it, and they refinanced it essentially as a duplex. But again, if you're looking for a duplex, like they were saying, you have the separate electrical panels, you have the plumbing all different, like it's the purpose built for 2 units. Whereas with mine, there's some things that were kind of a little pieced together, we'll say. But
yeah, you can do it, less expensively that way too, right?
Yeah.
And still, in most cases, if it's the same amount of square footage, charge the same amount of rent.
Yep.
Right? So that's why I think it's a huge opportunity.
Oh,
Backyard
massive.
suites.
Yeah.
Like even with duplexes, you can add a 3rd unit in an R2 zone. So there's all kinds of opportunity there.
Yeah.
Yeah.
With the 2% cap on rent increase, would you recommend a fixed term lease rather than a month or year to year?
Always. Everybody knows who's been there and got burned from the periodic leases. Don't do them unless you have, like we have tenants that technically they're on them because we know that they've been there for a few years. But always the fixed term leases, because in this market with that 2% rent cap, you have the option to say, okay, unfortunately I like you, but you can't stay because I need more rent. Like you have that option. So for that reason, and then a whole lot of other reasons, because a tenant, they get tenure day 1 on a month-to-month lease. And what a lot of people don't understand is that it sounds like a landlord can give a month's notice to quit, but you actually, I know some people have been through this and are nodding, but you actually can't, as a landlord, you can't give any notice. You have to have a hearing basically to end it. So that's kind of disturbing. The same thing with a yearly lease. So it's not a good option for landlords, especially not right now with that rent cap.
Nova Scotia had gotten rid of the rent evictions, but then they kind of brought them back. What's the specifics on that?
Yeah, so
It's great.
It's very great.
Ooh, yeah, it is. Because I don't like evicting people, but sometimes, depending, like in this market, I have a client who bought a duplex and the tenants are paying $875, and we rented the other unit for $1650, and it needs a renovation, and the tenants are good, and you have to consider that, you have to work with your tenants to sort of offer something. So in this case, we've offered more than we need to. This is a duplex, so you have to offer a month's rent and compensation. You have to get permits from the city to do what you fill out the form. It's the DR5 form. And then you have to give, anyway, in our case, we're doing 3 months notice and we're offering 3 months rent and their damage deposit back. Because we feel like that's fair. They need to take that to their next place to try to get, they're not gonna be able to get what they have, which is a 3-bedroom, like a 3-bedroom duplex at that price. It's just, you can't get a 1-bedroom apartment anywhere for that price right now, as far as I know.
And is that like only on the fixed term lease, or that's periodic lease, month to month?
So, I'm just trying to think, well, in this case, it's a periodic lease, a fixed term lease, I think.
They're not as flexible, the fixed term
check on
leases,
that.
you have to be
Wait till it
careful.
ends.
There are a few cons, there's not very many to a fixed term lease, but there are a few, which one of them being if you're selling a property and there's a fixed term lease, you can't use an affidavit for the new owners to move in. So you actually have to observe that fixed term lease. So it's not as flexible. I say the best thing to prepare yourself if you're gonna do any of that is be ready to go to a hearing under the Nova Scotia Tenancy Board. Because if you don't have an agreement with the people, written, and you're both okay with it and everybody's happy, it's likely gonna go in front of the committee and then you're gonna deal with it. And that doesn't always go that well, right? You know, sometimes you win, sometimes you don't.
So that DR5, the renovation form, I guess, the tenant has to sign off on it. So they have the option to not sign. And then you go to a hearing. So that's not really fun.
So that could be an indefinite period of time with the tenants in the house, even not paying rent at all.
Sure.
Well, if you didn't pay rent, you have an easier time.
But it could be
But if they pay,
going on the other way,
they
paying
wanna
the
stay.
exact
Yeah, they do.
lower rent
Yep.
for an indefinite period of time.
There's a lot of variables, and I mean, you gotta be prepared for the worst case, and that's why I always stress having a good relationship with your tenant. The toughest ones we've ever had was stuff where we've inherited tenants. So we bought in a duplex or a multi-unit with tenants that were managed poorly, and the relationships were toxic. So they came in expecting we were gonna be just like them. So we had to rebuild the relationship. It's almost like getting a foster dog. Like you've got to show them that you're safe, and rebuild that relationship to a point where it's like, I'm not that bad guy. I'm going to fix things when they need to be fixed. You know, if there's an issue, I'm going to be very responsive. So I think it's like that with any relationship in any business, really. Like you know, you have that good relationship and an understanding when it comes time to having to do those things. It could go smoother than the rough situations we hear about. But they do happen, you know. Sometimes people just don't want to be friendly, you know. Yeah, we've got all kinds of stories we could tell you. We'll write a book sometime. Yeah. We brought Ian here, but he didn't even get a chance to say much yet. But so I want to, introduce Ian Armour and have him chat a little bit because he's been navigating this market successfully and. We have a lot of people just getting started in investing in the group, and the question I get asked almost every day is, can you actually make things work in this market? And the answer is yes. You can. You just have to plan a little bit differently. You have to pivot. You have to do things that you weren't doing in a market 3 years ago. Everybody comes and says, man, I wish I would have bought 20 properties 3 years ago. I'd be a millionaire. You can still make cash flow. You can still make profits. You just have to, change your method. So Ian's going to chat a little bit about his business and how he's done some of that stuff.
So, we'll start from the beginning. So my real estate journey really started probably about 10, 12 years ago. I'm sure it's common with a lot of you, read Rich Dad, Poor Dad, and then that's where, my whole life changed. Like, it's so cliche to say, like every real estate investor says it, but it really did. I was at university at the time, and then I was like, well, what am I doing here? Like, I don't want to go work for someone. I don't want to have to go to a job 9 to 5 and do all that. So decided, I'm going to get into real estate and grow passive income. So naturally, the first step was to start a roofing company, and that's what I did. So I started a roofing company through university. I was doing that out west to try and earn some drinking money, and then we went on from there to run the roofing company for a bit, but always had an eye on real estate, just listening to podcasts, reading books, Bigger Pockets, if you guys, I'm sure you guys have heard of that, was a big part of that podcast group, listening to that, and then just trying to take in the knowledge, because it's definitely scary going from, just drunk university student to wanting to be into real estate. So did what I thought was more attainable at the time, which was take the skills that I have, start a company. So still own the roofing company, and that sort of operates itself now. But for the last little while, I've been in all sorts of things, flipping houses, now getting more into building or buying apartment buildings, and going from all that stuff. So first house I bought was about five years ago in the North End. For probably a third of what it's worth now, and I still live in that house. I added the basement suite, and just gearing up to get that one on the basement suite on Airbnb, which is great. And then from that, took a little break from the real estate side of things, and then really in the last 3.5, 4 years is when things have really gone. So I flipped about 10 properties, so mix of houses, condos, some multifamily stuff in there. But then probably about a year and a half ago, decided it was time to get a little bit more serious with the real estate side of things. So met a partner, her name's Jenna. She's not here tonight, but Jenna and I have been working together about a year and a half. And what we did to start off was pretty much everything that we could do in terms of building our mindset. So we're huge on that. And it was monumental in the journey, was having someone there to make you more accountable for the things you say you're going to do, the learnings that you're trying to do, as well as trying to build these systems of trying to find all this stuff and figure out this world of real estate. So in the last year and a half, Janelle and I, we've done 3 house flips together, and then we again took another little pivot, and we've bought 2 8-unit buildings, bought another duplex as well, and it's all buy and hold stuff now. So spent a few years flipping houses and realized, like, man, I'm not even doing what Rich Dad Poor Dad told you to do, which is to buy assets, keep those assets, and earn the cash flow off them. So flipping now is more of a way to bring in some of the cash flow type stuff, or bring in some of the cash to operate the business. But if it just pains me every time I have to sell a house, because I just want to keep that house.
He does a good job at flipping.
So this is one of the last ones that we had just done. So this was North End Dartmouth, and our strategy's simple, and you've heard it throughout all the podcasts and all the books and stuff. We make the money in the buy, and it's kind of doesn't make sense in a market like this. Like, where do you buy these houses? So that's where the magic actually happens. So I know a lot of you, I'm sure a lot of my friends, a lot of people that I know, they do the let's cruise Viewpoint for hours a night and see what we can do from here. But our thing is, if you're looking on Viewpoint, like you're not going to make money there. Like you can if you're going to do a buy and hold, but to flip something on the MLS in this market is a far cry from where you should start. So what we do, we do a bunch of different things. Like we bought most of the properties we bought recently, they've all come from different ways, but it's a lot of networking, a lot of mail out, a lot of door knocking, a lot of bird dogging. So we have people that have gone out and identified properties for us. And it's a game-changing approach to going into the way you should be buying these things properly. So for example, this house here, I think we bought right around December for $110,000, and then sold it for a few months later for $295. I forget.
Yep.
Yeah, something like that. Yeah.
Oh,
So that's an example of one. We picked up, what was it, about 2 years ago in Fairview. We bought a house for $95,000, and a few years before that in Armour Lake, bought a house for $60,000. So it's like, you know, you hear, and like, you know, the few years before that, I've been like, there's no way you can do that. Like, there's like, you hear these American podcasts and people are buying houses for $17,000, and it's like, there's no way that exists. But those deals, they are out there. They're definitely way harder to come by now, especially with everyone and their dog knowing that Halifax real estate market is hot. But those deals are definitely still out there. So that's really what we've been doing. Not a huge fan, like I said, of doing the flips, because yeah, it just sucks to, like, any of the houses that I've flipped, I'm like, man, if I had kept those, I would have a lot more money than I do now.
We had a conversation about a year ago,
Yeah.
I think, about that, and you're like, I'm getting tired of being
Yeah,
down. It's
yeah.
like, you gotta hold on to
Yeah,
them, man. So it's
yeah.
great that you're doing that.
Yeah.
Tempting though.
Oh yeah. And but at the point in the life, it was like, well, you know, a lot of that money's then, you know, now reinvest it. We're building up our brand, and we're you know, investing more into mindset. We're off to a conference, and for a multifamily conference in Toronto in a few weeks, and it's like, it's nice to cycle that money. So it's not just, we're not just throwing it away. We're reinvesting it. But where our next moves are is, you know, if we do a flip, which I want to move away from, that's fine, but the real focus is now into the multifamily side of things, and it's the exact same deal as these single family, or these flips that we're doing, same methods and stuff. We're not even looking at the MLS. It's all off market, it's all networking, it's all our marketing, it's all, you know, talking around and all that stuff. And it's the same principle. We're buying things well below market value or what you could get on the MLS, and we're doing a lot of value add real estate. So yeah, like currently we probably have about 8 units under construction, and yeah, we're all about the negotiating tenants out, bringing new tenants in, all that stuff. So that's really what where we've been at. But like I said, the biggest thing that's taken us from, or me from that, you know, drinking university student to where I am now is all about that, the mindset, you know, the podcast, the books, like me, I know, like my social media right now, if you were to go through it, it's like real estate, money thing, real estate, motivation. So it's all about changing that environment. And yeah, right around the time Janelle and I met, we started hosting with a few friends a weekly podcast meetup. So a few of those people are here tonight, which is great. But it's just that, again, that extra level of accountability where once a week we're listening to a guy or a girl that's, you know, bought 300 units, and this is how they did it. Like, the information's right there, but it's and then hearing it's one thing, because that's where I spent, you know, 10 years of my young life, like, learning and just eating up all the information. But once you start connecting with other like-minded people and start putting things into action, that's where, again, in the last year and a half, like, we're up like 20 units or something like that, and we fully expect to come speak again in another year or two and be up 2-3 times that. So yeah, that's a little bit.
I'm gonna hold you accountable.
Yeah, no, that's how it works, you know. So yeah, any questions on any of that?
How do you do financing?
So financing, it's all different. So it depends on what we're doing. So what another game-changing thing that we've been doing a lot of is either private lending or joint venturing. So that's something that I've done, and something that I'm going to continue to do is we have money partners. So basically, we would go find 8-unit building or whatever it is. We have partners that raise all the money, and then we do the work. Then the plan being we do value add investing in our multifamilies. So go in, do a lot of work, double rents, you know, raise the value of the building like crazy, and then refinance, pull out a good chunk of that money. The investor gets their money back, and they get to continue to have some equity in the deal. So you know, we're doing an 8-plex right now, and we're on pace to have it completely renovated, refinanced in almost exactly a year. So that's something that we're gonna keep doing, and that's something that we're really looking to build up as well as and like I encourage you guys to reach out to me. I've got my cards right there. We're actively looking for more joint venture partners and stuff like that as well. So if you know want to help fund a flip, or if you want to lock some money into a multifamily deal around here, that's certainly something I would love to talk about. And as the members of my group know that I can chat real estate pretty much all day, every day. So if anyone wants to call, I will talk your ear off.
Maybe you can explain what that method is a little bit deeper, the method you're using now to refinance.
Yep. So
got a term for it.
Yeah. So I'll do it as quick as I can, because it's a crazy process, but it's super simple by nature, but it's not easy at all, as anyone that's in this world knows. But essentially with a multifamily building, they're valued based on your net operating income, which is simply all of your income minus all of your expenses, not counting the mortgage. So you're basically determining how much this building is making, just like as its own type deal. So then what we do is anywhere where we can increase the income and decrease the expenses, there's about you arrive to your net operating income, and then what you have is your capitalization rate, which is kind of an arbitrary number, but it essentially ties the value of the building to the area and other performing assets. So you take your net operating income and you divide that by your capitalization rate, which gives you your value of your building. Now, where the magic actually happens is, you say your capitalization rate, and what an average rate around here would be, say like 5, 6, 7% in and around that range. So basically, for every $1 that you can increase your net operating income, you divide that by a rate of say 5%, that's a 20 times multiplier. So every $1 that you can increase in your net operating income, you can bring $20 there. So when you do the value add strategy, it's incredible how much you can actually drive up the value of a building. And so when you do that across a whole building, like we're adding, we're buying things that say, $800,000, you do all this work, we're putting in a couple $100,000, but our net operating income's almost doubling, so the value of the building's almost doubling. All of our work that we're doing is a fraction of that value that's added. So then when we go to refinance it, again, at like an 80% loan to value, you can pull out the vast majority of that money, be up an asset for us, it's no money out of pocket, and it's for our investors. You can really push, or you can, again, get a good chunk back or do a lot of it. So what this method is, and I'm sure if you're around, it's called the BRRRR method, and you often hear that for single family homes or small like duplex and stuff like that. Same thing applies to these multifamily buildings. So that's what we're doing.
BRRRR stands for buy, renovate, refinance, rent, and repeat.
Yeah.
Remember that. It's
Yeah.
important.
Yeah. And we do a lot with that. So, and again, it's like when you have strategies like that, it's like, why am I flipping these houses when you could refinance some of them, pull the money out, and away you go. But again, just where the point where we're at in our business, it makes sense to do some of these flips, because like, again, it's like I don't necessarily want to own a 1-bedroom house in North End Dartmouth when I could do these flips on these smaller things that and again, like when you refinance at the end, you're not gonna your mortgage payments are gonna be high, so your rents aren't gonna produce a crazy amount of cash flow. So that's why with single family, our strategy is either gonna be do a flip or Airbnb, which is something that I'm getting into now. I have my first Airbnb going live, I think, tomorrow.
I rented it.
Yeah, Greg's in.
First guest.
Yeah, first guest. Fix it all apart. And then hope to have another 3 in the next month and a half, 2 months or so up. So gonna be dabbling in the short-term rentals and then doing a lot more of the multifamily, and then yeah, maybe a few more flips. But again, it pains me to sell them. So.
Burr is such a magical thing.
Oh,
I
it's
mean,
crazy.
when you think about what you're really doing, you know, I've done a few successful ones, Jenna and I, and you know, Ian's done several. Like, they work. You can buy a property and renovate it and refinance it and have zero money in it. So you own a property with none of your own cash in it, but you still have that 20% typically, or 25% equity still buffered in there.
Yep.
So it's that and house hacking are my two of my favorite strategies. Jenna will not let me rent out the basement, but if she would, I would definitely do it.
Oh yeah.
Tomorrow.
Yeah.
And you're the one who I'm going to rent to.
Yeah.
Make sure I'll raise your rent every year.
Yeah.
So Ian, I think is your 8 unit, is it on Herring Cove
Yeah.
Road?
Yeah, so one's in Herring Cove, and then one's just also in North End, Dartmouth. And yeah.
Because I drove by that on my way to one of my clients here,
Yeah.
to his house, and it looks beautiful.
Oh, thank you. Yeah.
Like you did a nice
Yeah.
job
Well,
making
it's
it look
only-
modern and
Yeah.
improving the area.
There's a lot more work still to be done, but we're getting there. Yeah.
And the question I have is, so you were able to renovate all the units?
Right now we have, I think 2 done, 3 are currently under construction, and 2 of those should be done in the next, say 2-3 weeks. And then 1 that's just fresh, and then we have another tenant that's leaving in the end of the month, so whatever, Monday or whatever that is, so it's busy.
So how did you manage, because you took it full,
Yep.
it was all tenanted, how did you manage to do that?
So a lot of what we're doing is cash for keys. So it's a simple strategy of saying, hey guys, like what the tenancy board is saying, if you just want to end a lease, like mutually end a lease, it's 3 months rent or 2 months rent. Forget what it is, but it's, yeah, there's something in there. So that's what we offer is, I think it's 2 months rent. It's either 2 or 3 months rent to that person, and just say, hey, do you guys want to move out and look somewhere else? And we've just been incredibly lucky that, you know, a lot of the tenants in there are getting sick of all the construction and want to.
That was the strategy.
Oh, yeah. Yeah. So yeah, no, like right off the bat, 2 were like, yeah, I'm ready to go, and then the rest of them, like they've all been good sports about it for the most part. One of them is moving into one of the completed units, paying the higher rent, and then we're gonna go rent theirs. I've got other friends with units as well, and the same deal. They'll get a unit renovated, and then one of our tenants will move into their building, and they're giving us tenants too. So we're kind of trading tenants. So yeah, no, that's been a really cool way to do it, and yeah, it's again just chatting with them and seeing what works. A lot of them aren't being crazy stubborn or anything like that, and we're genuine with what we're doing. We just try and be good to them and chat with them, and like we're paying for their moving fees too, just to ease that burden. We've helped people find some units, like I said, with those. So it's we've been fairly lucky so far, but it's also like we're well within our means to say, hey, we're gonna rent evict you, but it's not like a hey, we're just kicking you out. It's saying, hey, not to like hold that power over them, but to say, eventually it's going to go down this way. If you start looking now, like you move out with all the flexibility in the world that you want, Plus you're getting your 2 months rent or 3 months rent and moving expenses. And we're taking these 750, 700 for a 2-bedroom unit in Spryfield, and we're turning them into the layout like 16, 1700. So yeah.
That's fantastic.
Yes.
Yeah, because I was a little nervous there, like we chatted about that.
Yeah.
I don't know how this is gonna go. You
Yeah.
can ask, and
Yeah.
you can offer, and see,
Yeah.
and so you left out.
No, and like we haven't even posted an ad yet because we just know people that are like, yeah, I want to get in, and so I'm even curious because we're doing them really nice, all new tile, kitchens, all new floors, trim. Like there was walls in it that we're ripping out, opening it up, pot lights throughout. So it's going to be a quality unit. So I'd be interested to see if we did advertise what it would even go for, but we have enough people that just know what we're doing that they're always asking, hey, do you have any units coming up? So it's finding the tenants is not the hard part here. Yeah.
You should try property manager.
Yeah.
I know one.
Yeah. Yeah.
Just wanted to get more insight in your decision to move into short-term. You mentioned going into Airbnb. Just wanted to get more insight into that decision, and of course there is that disparity between renting as opposed to Airbnb.
Yep.
Just wanted to get your, as I said.
Yeah. How it happened to me is so I have in my original house that I bought, I put the secondary unit in. I had friends living in the basement there, and then I recently just purchased another house on right on the Bedford Highway, like overlooks Birch and Anchor, and it's going to be a really nice project. Basically, I convinced my tenants from the downstairs to move into the other duplex, and they're going to run my Airbnb for me. So, and the decision was just, it's purely cash flow. Like you look at what I was getting for rent, they've been there for a few years now, even like 1,500, but to run even just like basic numbers on Airbnb, you're double that at least. So that's something that I'm exploring with some of my stuff, and then even Janelle and I we're looking at doing in some of our multifamily buildings. Running some Airbnbs out of that. We're still getting some of our normal tenants in first, but as we fill up the building, we're gonna say, hey, what does it look like to do even like a medium term rentals where it's you're staying at least a month, so it's not so much turnover, but they can get familiar with the area. Again, lots of people looking for these medium term rentals because you're moving to Nova Scotia, you want to try and buy a house here, you want a nice furnished rental, I'm just getting into that again. Next year when I'm back with 60 units, I'll tell you how the Airbnb transition went. So
He'll own the hotel.
Yeah.
Yeah. Are you flipping the Airbnb? Like, did you hire a company to do that, or do you have individuals?
No,
or?
hired cleaners, have all that stuff. Yeah. So and that was my intentions from the beginning. It was like I do not want to do anything with the Airbnb. I want to build it, find the deal, renovate it, and maybe even furnish a little bit of it, but for the most part they're doing the furnishings, they're running everything, because I just know that's not what part of the business I like. So yeah.
How do you control the building costs, material, labor?
It's very tough. You just try your best is the answer, but you just make budgets for it. I mean, we knew, like when we first bought it, it was like, okay, like materials are getting really crazy, and like this is getting really crazy, and like our plans that we've tweaked them so many times that again, I've done specifically a bunch of flips, but the multifamily, it's just one big house with a few extra systems in there that you get to learn about. So, but overall, we're over budget, but we're also, when we look at the value of like how much these properties are going up in value, it's like one building is going up 20% a year or whatever it is. It's like all of our numbers were fairly conservative, but when you look at like where the market's going, it's like who cares if we're even 50 grand over budget because the building's gone up in $200,000 in equity. So that's part of it. The other part of it is like balancing how much money we're actually putting into it versus when we go to refinance it, because refinancing is not going to be the hard part in terms of trying to get that higher end value what we want, but the higher we go into, you know, pulling as much money as we can out, up goes your mortgage payments and down goes your cash flow. So it's a juggling act there. It's a juggling act when doing the budgets. It's a juggling act getting contractors throughout. So it's definitely not a straight line process. So yeah.
And have you done any energy retrofits by any chance? And do you see any value in those in terms of like cash flow or adding value to the property?
I haven't done any like with NS or Efficiency Nova Scotia stuff.
Yeah, like adding heat pump, for example.
Oh, yeah.
Or like insulation, that kind of stuff, or even adding solar panels.
Yeah, so one of our biggest fixes, so like I said, you know, half the battle's raising the rent, but the other half of the battle is lowering expenses. So we went through in this building and it was all electric or all water baseboard. We're removing all of the water baseboard and putting in electric baseboard. And yes, that's wildly less efficient, but we can then put those costs on the tenant. So even by saving, it's about $6,000 in oil that's now going to be put on the tenant at a roughly 5% cap rate at say $5,000 savings. Our electrical quote is about $80,000. But we're increasing the building's value by a little over $100,000. So it's a no-brainer in our eyes. It's a lot more work and stuff, but we get that value back. And now with the rising prices of oil and all the boiler stuff, it just makes sense. Like, and we get brand new wiring in the whole building. So it's an easy, just like you do the math, and it's like, okay, this is a good investment in the building. So
You save insurance costs that way too.
yeah, and we're also adding heat pumps that way. So.
I think it was this week, Nova Scotia Power put out a program. I think it was iPhones that put it out. Anything over 3 units, they're going to be, I think it's up to 80% of the value.
Crazy.
So 3 units and up, and I think there's a max bill. Like you can't get a 100-unit building replaced with them.
It's 3 to 40.
What's that?
Sorry. It's 3 to 40 units.
3 to 40. Yeah.
I actually work with Efficiency One on that program.
Oh.
Yeah.
So just to give you a little bit of information.
Absolutely.
It's up to 80% based off of the amount of energy savings that you would be making.
Okay.
Based on that installation from like going from a baseboard heating to a heat pump.
Right.
And we do those calculations on our end.
Still pretty good.
It's great. I've seen like $15,000 projects go to like 2,000.
Crazy.
3,000,
Right.
yeah.
Yeah, we've got a few multi-units that we're going to look at doing it. Absolutely. Sounds like a great program.
And then it also, just so that you're aware and everyone here is aware, if you are paying the electrical, you can just tack on the rest of that cost onto your electrical bill every month for 2 years.
Oh, wow. So
Yeah.
you could just finance that last. So
Yeah.
that,
Cool.
yeah, so there are programs, you know, that you can
Yeah.
actually take advantage of while increasing the value of your property.
Yeah.
Lowering your fixed costs.
Any other questions?
I do have an Airbnb question.
All
Have
right.
you had any trouble getting home insurance?
Haven't even looked yet.
I can tell you, they don't like Airbnb.
Well, I won't tell them. No, again, give me a week or two and I'll have a better answer.
Jenna might be able to have some insight on that. She's
Cooperators will insure Airbnbs.
Cooperators?
Will or won't?
They will.
Okay.
Yeah.
There's a few around. Cooperators is who we're with, so that does work.
Awesome.
Cool.
Scott's got a lot of information about Airbnb. He dove right in and has been super successful. We'll have him on the panel next time.
Yeah.
Our Airbnb subject matter expert.
Yeah.
Airbnb is really exciting, especially when you put your listing up the first time and then you get bookings. It's just like playing the slot
Yeah.
machine. They're gonna come and then they're gonna go.
Yeah.
And they're paying you.
Yeah.
Wonderful. Yeah.
Yeah.
Very exciting.
So we can do it with the basement?
He's drunk.
Yeah.
How do you manage to find all those contractors working?
Oh, it's I don't even know sometimes. It's crazy. No, again, that was a nice thing where again I did have my roofing company and did that for years. So really got to network, meet a lot of people that way, and like now it's always a friend of a friend or something like that. So it's it is tough finding them, but it's like I've got guys now that they work pretty much steady for me, pretty much going from project to project, and you just sort of build up that relationship with them. So I have a good chunk of, like, I wouldn't say in-house because they're still subcontractors and they do some of their other jobs and stuff, but it's just a few years of just knowing people and sort of building it out from there. So yeah, it's not often that I have to like go find, like I'm not really Googling contractors and stuff. It's always networking and saying, hey, who are you guys using, or something to that effect. So yeah.
Can I ask a question in terms of that? Do you have or ever considered versus contracting, maybe not fully, but have your own crew of employees?
Yeah, and no, I do not want to do that at all. No, it's and that was like a big a shift I had in my roofing company early on. It's like I was up to like 15 employees or something like that, and like it's just so hectic. And like if you're worrying about who did what hours and who's you got 7 guys driving to do one shingle load or something, and it's just so messy. So I've completely changed. Like if I can avoid having an hourly employee, I will at all costs. It's all fixed price, and it makes the bookkeeping easier, and it's just it's not worth the headache. So it seems like, yeah, if you have your own guys, like you can save money doing it that way, but I found that it's just as well. Find a good, reliable contractor. They have their own insurance, their own workers' comp. You're not chasing that stuff down. Plus, again, the bookkeeping side of it. It's just, for me, it makes way more sense to have subcontractors than in-house.
So you never had, you don't feel the need at all to have, even if it's one person that is kind of a site manager that you can trust.
Yeah.
And work with.
Yeah,
You
so
don't have nobody.
No, so I do have someone in that role. They're fairly new. So right now, they're hired on as a subcontractor, and that would be about the only person, but they'd be on a salary, and that would be a little bit different as well. So again, not having to do so much babysitting on all that stuff. But again, as we grow, me personally, I'd like to get my head out of all the construction. Like it's not where the passion is. I want to keep finding more deals, raising money, networking, that type of stuff is where my passion is in the business. I've done enough roofs, house flips, and all this stuff to be okay to only have to check in on the project and not sort of manage it. So experimenting now with growing that side of it, where I have to do way less of the construction or any of the building management side of it or construction management side of it. And as I grow, that's just like a stress point for me, that it's just getting tired. And again, for me to scale to where I want to go, there's no way I can manage all these projects. So that's part of it. It's building out a team that can be great at the areas that you're either not passionate about or just a little bit tired of doing. So
Who Not How is a great book to read.
Yeah.
It's finding what you're passionate about and do it.
Yeah.
And the stuff that you're not good at, find somebody who's good at it and passionate about it. It's life-changing when you actually make that step. I was doing the same thing. I was installing laminate flooring, and I was, looking for deals, and then up till 3 in the morning coming home, during renovations, on some of the stuff we did, and we started finding people to do that, and spent our time focusing on what we were good at. I'm not good at putting in laminate floor.
Yeah.
I mean, I can do it, and it'll be right, but it'll take me 12 hours, where somebody else will take 2 hours and do it faster, and I can move to the next project.
Yep.
Great book, Who Not How.
Yep.
Yep. Recommended read.
Yep.
Actually, I'm a private lender from Toronto.
What's that?
I'm a private lender from Toronto.
Oh, great.
So what you're doing, we used to finance many of them.
Yeah.
Some of my customers are doing 20 and 50 at a time in Toronto area, in Ontario. The question I have for you is that here in Nova Scotia, if you have limited money, what is your next move?
If I had unlimited money?
Access to it.
Yeah, so that is pretty much in lines with what my like, that's something that I've been going through recently. It's like, you know, the first getting into the multifamilies, that was, well, first getting into any real estate, like there's a really high barrier of entry mentally, where it's like, oh, there's so many things that could go wrong, or like I don't know what I'm doing, or all that stuff. But you just do that first deal, and that builds confidence and moves you forward and forward and forward. So now that's the same thing applying with the multifamily side of things. It's like, okay, I've done my first 8-plex, now I'm moving to my next 8-plex, and then had the big realizations recently, like what's the difference between, you know, doing an 8-unit building and an 80-unit building. It's the only difference is a couple of commas really in the purchase price. Like it's seriously, once you get that larger building, you have the economics of scale to actually hire out people that are even better to do this this project to the way it should be, and you gain that buying power on materials and stuff. So my answer moving forward is I'm actively shopping now for these, you know, 20 plus, 30 plus, 40 unit buildings, and that's the direction I'm trying to go, is buy more larger scale multifamily and doing the exact same things that we're doing to it. So if you got unlimited money, I'll meet you after. Yeah, cards right there. Kevin, hand him a card.
I was saying in my career, I had a construction company too. Actually, I'm an architect by trade. But we had over 100 people working for us.
Yeah.
And at some point, we just said, no, let's focus on the bigger thing.
Yeah.
We employ a contractor with 400 people.
Yeah.
They build for us.
Yeah.
So which is you have less management to do, right?
Yeah.
Because doing the payroll and running of everyone is very tough.
Oh, it's a nightmare.
Babysitting, really.
Yeah, that's what it is. Yeah. And again, that was perfect for me. Like with the roofing company, I got to do my crash course on how not to do things, and then started to learn things a little bit better, and was able to just take some of those types of lessons and apply it right into real estate. So that was definitely helpful in the career of real estate so far. But again, yeah, I have a lot of bigger, hairier ambitions coming up. So yeah. So any other questions?
This is kind of off topic, but I was just wondering, I guess your guys' opinion on like the open bidding system trial.
Oh yeah, that's cool. Yeah.
Just wondering your thoughts on it, I guess.
So open bidding, we were talking about that at lunch today as well. You know, I think there's some consumer protection on both sides that would be presented by having an open bidding situation. But our conversation today led to, it depends on what market we're in.
Yeah.
So in a buyer's market, you know, who's going to benefit from the open bid, right? And on the seller's market, who's going to benefit from the open bid? So the seller could say, well, if everybody knows the highest bid is $400,000, that $500,000 person who's sitting there just wanting to win this because it's his 15th offer that they've written, and they're like, I'm going to win this whatever it takes, they won't go to that number. So that potentially loses that seller $100,000. It's a flip coin, really. I think there's a compelling reason for it and a compelling reason not to, and it just depends. The president was actually telling us today, each and every province has its own set of rules. So the open bid that they're talking about right now is what they use in Australia, and the one that's coming here will probably look somewhat like it, but not really. You know, will it have the terms like there's no financing involved on the offer? Will it have no inspection? You know, because that has ramifications as well. If 50 people don't see, you know, if there's 50 people bidding on a property and they see 49 of them haven't put an inspection clause in there, well then people are going to be scared to put an inspection clause and protect that investment. They may run into buy a place and it has a structural foundation issue that costs $100,000 to lift the house and stuff. And because of that system, you know.
Yeah,
What are your thoughts, Amanda?
Well, I think it's really, it's going to come down to what it actually looks like, and we're not 100% sure what that is yet. And there was talks about how the way that the system's set up, that they may be open bidding to a certain spot, and then the seller can choose to make it go black, and then everyone can still put their final offer in. So it's like a combination. Yeah, so I mean, there's just so much more about it that we have to learn, but I do know that I think it will help a lot of the consumers have a better outlook on how realtors are handling the market, because right now there's some mixed opinions, and a lot of the public seems to think that we are somehow controlling this, and it's just not the case. But I think that if things are more open for everyone to see, even if the public can go in and see that there's 20 offers registered, it may give peace of mind that there actually is 20 offers registered. They've been doing that in Ontario for quite a while, where you have to actually register offers. So I think there will be some benefit to it, but of course I don't think it's something that's just gonna come to market and be perfect right away. And I do think that there may be some options for individuals to opt out. So if you were as a seller able to make that decision whether or not you want to do blind bidding. So there's just so much more to learn, and I'm excited to see where it goes. But
for those of you who don't know what it is basically public information on how many offers, potentially the price, potentially the terms of that offer being open to everybody. So when you buy a house, you see what the next closest offer is.
Yeah.
I'm gonna get a gavel and I'm gonna set this on and just sold to you.
And it's going to be all electronic at this point. So I don't know if anyone's familiar with how they do this stuff in Australia and New Zealand, but there's oftentimes actual auctions on the lawn type deal. You'll have a month to go look at the property, get your financing together, do your home inspection, whatever, and then come to the auction prepared. Whereas the way that things will go here, we expect will be more so buyers will still have a buyer's agent. They'll write the offer with their buyer's agent. The buyer's agent will submit the offer, and it will be registered. And then there'll just be a little more open. There might be more things we could see, like price and things like that. So it won't be. I think there's a lot of people thinking that we're just going to go to auctioneers on the front lawn, and it's not gonna go that route. Well, we hope. I'm not ready to.
The Wild West.
So yeah.
In Ottawa, there's already an auction platform online.
Sorry?
In Ottawa, there's already an online platform.
Yeah, and I think I do kind of hope that there's options for people to opt in and out of these programs, because we were talking about, what if the market flips and it becomes a buyer's market again? Then we might not be registering multiple offers. But I don't know if you remember, years ago, you'd see a property sell and you're like, oh my gosh, I can't believe that only sold for $150,000. But had the public seen that the highest bid was only $150,000, maybe someone would be like, I'd pay $175 for that. So it may help the seller in a buyer's market. So there's just different angles of looking at it.
Mark?
So I just you touched on a little bit ago about people not getting inspections when they're buying properties now in these hot markets. I do a lot of financing for properties outside of HRM, where properties turn over a lot less frequently. So there's a lot of older wiring. There's a lot of older plumbing. There's a lot of things where one inspector was responsible for 400 square kilometers of inspecting. Some things got done real fast,
Drive by. No.
Yeah.
Good.
My advice is do not go without an inspection if you buy anything on the outskirts of the province.
Right.
There's some really shady stuff.
Wow. There's some in Halifax too.
Yeah, there is. They change hands here a lot more frequently, so a lot of that stuff gets fixed as you go along.
You're right.
Like some of these things that don't change hands for 30, 40 years.
And all that property all over Nova Scotia is just being bought up by people from
People
Ontario.
who
Yeah.
are looking at it,
Yeah.
exactly, 100%.
So-
They're gonna get some real surprises.
They're coming into the market with a mind frame of we don't put in inspection clauses
Yeah.
in Ontario. So
What I'll start recommending
comment
for
to them.
people in that situation is maybe to bring an inspector during the viewing and try and or a tradesperson just to identify some huge, red flags, big ones. The foundation, okay, is it electrical, the roof, what are my 3 major things that I should be worried about? Okay, I can deal with the rest. Budget for it and then move on. There's things we'll have to adapt in that market in order to protect the consumer because, they sometimes need protection. If somebody comes to me and says, I want to waive this, this, and this, and I give them the worst case scenario, and usually they'll come back and add some stuff back in. You want to make sure waiving financing is, oh yeah, I'm fine, I'm approved. Oh, what happens if that property is not approved by the bank? You might be approved for $1 million, so what if the bank thinks that property is worth 700? Do you have an extra 300 to cover the difference? So and we saw, there was one relisted, I showed it last week. It was purchased 2 months ago, and they put it back on the market. They never moved in, it was vacant. And I called the agent, I was like, why, what happened here? He's like, well, they couldn't close on it. Didn't have financing on closing day. So the deal fell on closing day. And they had gotten $500,000 for that property, and it was listed at $350 or $375. And it was public information, it was still out on the MLS of what, and I was like, why? Why is this so, why are these guys moving so fast? What's going on here? So. Any other questions? Yeah, you guys. Time are we at?
It's 20 to 9,
Yeah.
so
20 to 9 already.
we want to leave a little bit of time for you guys to network. with
Yeah,
specialists
one other
here.
thing, I do always try to bring a book recommendation. This is a great book that I just read, The Magic of Thinking Big. It's a mindset book. It's not necessarily just thinking about big opportunities. It does involve that, but it's how you deal with people. It's your relationships. It's how to, whether you're working in a 9-to-5 job and trying to get moved up to an executive level, or you're an entrepreneur trying to break through and make your future that way. There's all kinds of great and amazing things in this book. And it's real. Like the stuff they talk about in this book is real. About a year ago, Jenna and I and one of our business partners in the room here today thought about getting into self-storage. And some of you may know, we've now just closed on our 4th location. So we now have 4 self-storage businesses. And we just started looking at 1 unit a year and a half ago. And we had a goal of getting 500 units over the next, I think we had a set a goal maybe 2 to 3 years, and we'll achieve that goal probably in 3 months from now. So thinking big and finding the right people, and finding the opportunity, the person in the room, I don't know if he wants me to say who he is, but he brought a good point to us a long time ago, and I say it's his, he says he got it from somebody else, but you have 3 pillars. You have people, you have opportunity, and you have money. And if you have 2 of those, any of those 3, you'll find the 3rd. So keep that in the back of your mind, like there's great things can happen.
It's money, people, deal.
Yeah.
Money, people, deal. So.
Is that what I said? Did I say something?
Opportunity.
Yeah, opportunity, deal.
Yeah.
That's a deal. Every deal is an opportunity. So yeah, that's the book I like to recommend. I recommend a lot of books. Actually, I'm going to give away a book today to the first person who can tell me what BRRRR stands for.
Buy, renovate, refinance. Buy, renovate, refinance, repeat.
No.
I missed one. I'm trying to get under pressure. Buy, renovate, refinance, rent, repeat.
Yeah. That's it. Here's your book. Grab it on the way up.
Oh,
Oh, this book, by the way. Another great book, Never Split the Difference, written by a hostage negotiator in the FBI. Great read. Another one that I highly recommend. And that's it. That's all we got for tonight, guys. We are going to try and host another one in June. We're going to be talking about rent-to-owns and different things. We're going to probably try and get some people in to talk about the state of the financing, maybe some big bank representation and some mortgage brokers to talk about financing deals. And private money. Yeah.
I have a question.
Sure.
For, how do you meet private lenders?
There's one right there.
See what happens when you come to our house?
Oh.
Thank you very much.
He's really good. Yeah.
You're really good. Yeah.
Have a chat with Marty. Yeah.
Yeah, so thanks so much. Hope to see you all again in June.
Thanks, guys.
Yes.